What's up, ladies and gentlemen? My name is Ravi Wadden, and in today's video, I'm going to give you 3 Indian ETFs that you can buy and hold forever. Now, many of you watching may be wondering why I'm doing a video on Indian ETFs, and the answer is really quite simple. The Indian economy is expected to be one of the best performing economies in the years to come. And to truly showcase this and actually back what I'm saying with data, I want to show you guys a report that was published by Deloitte in July of 2022. And here's the article. It's titled The Indian Economic Outlook, published in July 2022. And I'm just going to go over some key points that were written in this article. And if you all want to read this article in detail, I will post the link in the description. And here in the second paragraph, it says, we, as in Deloitte, expect India to grow by 7.1% to 7.6% in fiscal year 22 and 23, and 6% to 6.7% in fiscal year 23 and 24. And it goes on to say that this will ensure that India reigns as the world's fastest growing economy over the next few years, driving world growth even as several major economies brace themselves for a slowdown or possibly a recession. And as I mentioned earlier, I'm not going to dive into this article in detail, but if you want to check out this article in greater detail, I will post the link in the description. But really quickly, before I give you guys my 3 ETFs, if you guys appreciate the research that goes into these videos, please give this video a like, and please consider subscribing to my YouTube channel. And the way that I'll structure this video is I'll give you 3 ETFs ranked from 3rd place to 1st place. So in 3rd place, we have INDY, which is the iShares India 50 ETF. So INDY gives you exposure to large companies in India. It gives you access to 50 of the largest Indian stocks in a single fund, and it's used to express a single country view. And the investment objective reads that the iShares India 50 ETF seeks to track the investment results of an index composed of 50 of the largest Indian equities. Year to date, this fund is down 11.04%, and the expense ratio in this fund is a little bit rich for my taste at 0.89%. And if we look at the hypothetical growth of $10,000, so had you invested $10,000 on the inception date of this fund, which was November 18th, 2009, that $10,000 today would be worth $19,085.24. And if we look at the total return, we have a 1-year total return of negative 5.44%, a 3-year return of 4.77%, a 5-year return of 5.96%, a 10-year return of 7.93%, and a return since inception of 5.07%. So net assets in the fund currently stand at a little over $559 million. It trades on the NASDAQ. The benchmark index is the Nifty 50 index, and to be honest with you guys, I see a lot of people posting about how they can get Nifty 50 exposure. And if you're not familiar with the Nifty 50, you can think of it as probably the Dow Jones 30 index is probably the most similar thing that we have in the United States. And the Nifty 50 index is what this ETF tracks. So that's why it says that the benchmark index is the Nifty 50. And as I mentioned earlier, we have a fund inception date of November 18th, 2009. Portfolio characteristics, number of holdings, 51, and a PE ratio of 21.45. Here we have some sustainability characteristics. I'm not going to go over them, but if you want to pause this video, please feel free to do so. We also have business involvement. Please feel free to pause this video if you want to look at this. And in terms of the top holdings of this fund, we have Reliance Industries at 10.89%, HDFC Bank at 8.27%, ICICI Bank, Infosys, Housing Development Finance Corporation, Tata, ITC, Kotak Mahindra, Hindustan Unilever, and Larsen & Toubro at 2.93%. Now, if we take a look at the sector exposure breakdowns, you'll see that financials definitely make up the largest portion of this fund at 36.77%. Followed by information technology at 13.79%, energy at 12.44%, and we have consumer staples, consumer discretionary, and the rest of the sectors at under 10%. Now let's move on to the Indian ETF that takes 2nd place, at least in my opinion, and that's EPI, which is the Wisdom Tree India Earnings Fund. And I'll go ahead and link the URL to each one of these ETFs in the description below. But for this video and moving forward, let's just take a look at the fact sheet of these funds. I think that'll give you a much more better perspective rather than me kind of scrolling up and down the page on these actual home pages of these ETFs. So let's go ahead and open up the fact sheet. And here's the fund overview. It says that the Wisdom Tree India Earnings Fund seeks to track the price and yield performance before fees and expenses of the Wisdom Tree India Earnings Index. The ticker symbol this ETF trades under is EPI. It has an inception date of February 22nd, 2008, a gross expense ratio of 8.84%, and a net expense ratio of 0.84% as well. Total number of holdings in this fund is 477. So compared to INDY, which we just covered, This fund has much more diversification at 477 holdings. It trades on the New York Stock Exchange, and current net assets sit at $649.94 million. In terms of performance, in the second quarter, EPI was down 13.63%. Year to date, it's down 14.41%. 1 year performance sits at negative 6.15%. 3-year performance sits at 6.67%. 5-year, 6.19%. 10-year, 7.48%, and since fund inception, this ETF has returned 2.56%. Now, the purpose of this video isn't to really go back and look at historical performance because, when you're investing and when you have a market outlook or when you're trying to invest for the future, to use a hockey reference, you want to go where the puck is going, not where the puck has been. And if you can't tell, when I'm talking about long-term performance or long-term investing, I'm relatively bullish on the Indian economy, hence why I'm doing this video. But although this fund has 477 holdings, its top 10 holdings are Reliance Industries at 9.45%, Infosys at 5.11%, Housing Development Finance Co. at 4.64%, ICICI Bank at 4.09%, NTPC Limited 3.12%, Tata Consultancy Services, Power Grid Corp of India, Oil and Natural Gas Corp, Indian Oil Corp, and Larsen and Toubro at 1.93%. And if you look at the top sectors of EPI, financials are the biggest weight at 22.98%, followed by energy at 19.48%, materials at 13.67%, and information technology at 12.4%. And then we have utilities, industrials, consumer staples, consumer discretionary, healthcare, and communication services, all under 10%. And if you look at the top fund country breakdown, which essentially shows you which country this fund invests in, it's 100% allocated to India. And with that, ladies and gentlemen, let's move into my first place pick for Indian ETFs, which is INDA, the iShares MSCI India ETF. And here is the fund fact sheet of INDA as of June 30th, 2022. And the fund's objective is that the iShares MSCI India ETF seeks to track the investment results of an index composed of Indian equities. And if you're wondering what the index is, it's the MSCI India Index. But let's talk about why you should invest in INDA, and iShares actually lists this out. It says 1, you have exposure to large and mid-sized companies in India. 2, you get targeted access to 85% of the Indian stock market. And 3, it says you can use this to express a single country view. You can pair it with SMIN for comprehensive India coverage. But let's go over the key facts. The fund launch date was February 2nd, 2012, has an expense ratio of 0.65%, which is the lowest of the bunch, and the benchmark is the MSCI India Index, and net assets currently sit at a little over $4 billion. And the top 10 holdings of INDA are Reliance Industries at 12.07%, with Infosys at 7.51%, Housing Development Finance Corp at 5.7%, ICICI Bank at 5.62%, followed by Tata Consultancy Services, Hindustan Unilever, Bharti Airtel, Bajaj Finance, Axis Bank, and Larsen at Toubro, finishing out the top 10 at 1.64%. And these top 10 holdings in aggregate make up 46.73% of the fund. Now, in terms of the performance, we have 1 year performance of negative 4.86%, 3-year performance of 6.35%, 5-year performance of 6.22%, 10-year performance of 7.3%, and since inception, this fund has returned 5.65%. Now, if we look at the top sectors for INDA, financials is the largest sector at 23.48%, followed by information technology at 16.83%, energy at 14.28%, and those all have a larger than 10% sector allocation, followed by consumer staples, consumer discretionary, materials, utilities, industrials, healthcare, communication, real estate, and then cash sitting at 0.12%. Now, to be completely honest with you, I think all 3 of these ETFs are great ETFs. You really can't go wrong with the 3 of them. It just really depends on what you're trying to do and what type of companies that you're trying to invest in. If you're just looking for an ETF that tracks the Nifty 50 index, then INDY would probably be your choice. If you're really looking for maximum diversification and diversification is really, really important to you, then EPI could be your choice. But for me personally, I think INDA is the best Indian ETF that you can buy. And here's why. And for me, it really boils down to 2 reasons. The first reason is diversification. So it doesn't have the diversification of EPI, but you are getting 110 different holdings. You're getting large cap holdings and mid cap holdings. And reason number 2 is the expense ratio. INDA has an expense ratio of 0.65%, which is the lowest by a long shot of any of these three funds. EPI has a net expense ratio of 0.84%, and INDY, which is also offered by BlackRock, has an expense ratio of 0.9%. And if you watch any of my videos, you know that I really like to hammer home the importance of expense ratios, because at the end of the day, fees will break your portfolio. You do not want to pay too much in fees, especially if you're investing for the long run. And as I mentioned, all three of these funds are something that you can hold for 5, 10, 15, 20 years, depending on your age and your risk tolerance. But for me, INDA is my number one pick if you're looking to invest in the Indian stock market through an ETF. And with that, ladies and gentlemen, I'm going to call it a video. Thank you all for watching. My name is Ravi Wadden, and if you guys enjoyed this research and this video, please give this video a like, and please consider subscribing to my YouTube channel. Thank you all, and I'll see you all next time.